Welcome back to Nuclear News. Let's start with price action. We have the Sprott Junior Uranium Miners ETF over the last 12 months up 32%, falling currently. Then we have the S&P 500 over the last 12 months up 22%, dipping as well. So the question is, why are uranium miners falling? The answer is the same reason that the Dow Jones tumbles 500 points. S&P 500 slide nearly 1% as broad sell-off intensify. So there's a broad-based sell-off across financial markets. We have interest rates rising. Interest rates are the oxygen of the financial system. They determine how expensive it is to get capital to finance future investment. Junior uranium miners need to have access to capital to finance future investment. Junior uranium miners are dipping right now for the exact same reason as everything else, right? Even AI is falling right now this week. Today is July 18th. Everything is just kind of dipping in this sell-off. Obviously, the broader market has no idea what is going on with these junior uranium miners, so they're going to sell off more, but they are still outperforming the rest of the market over the last 12 months. Now let's dive through exactly what is going on with these junior uranium miners to see if the market is sleeping on their potential. So obviously what they mine is uranium. Here's an updated uranium supply demand model from Cantor Fitzgerald. So the bars are showing the available supply. The curved lines in the background are showing the demand. So if the bars can't meet the demand, there is a supply deficit, there's a supply crunch, there's not enough available. So these junior uranium miners, these uranium miners control the fuel that is needed to fill that gap, and there isn't enough available, which means the prices have to rise, which means these uranium miners are going to cash flow, right? It's as simple as that. That's why over the last 12 months, junior uranium miners are outperforming the S&P 500. Here's another way of looking at it. Uncovered uranium requirements. This comes from the International Energy Agency, an RBC, so a legitimate source. So there isn't enough uranium available to fill this massive blue gap. We're talking millions of pounds. Look at where we are in 2024. Look at where we're going to be in 2025. Look at where we're going to be in 2026. It's exponential, which means the value of what these miners control is going to increase as there's a scramble to fill this massive exponential gap. And this is based on all available information currently. They know what mines are going to come online. They know how much is available in the ground. And this is still what they're showing. So it is absolutely massive. That is exactly why we stay on top of what is going on in this space. So here's the week's news. Speaking to the supply of uranium first. The Kazakhstan government is raising the uranium extraction taxes by up to 18% beginning in 2025. Why is this a big deal? Because the state-owned Kazatomprom is the largest producer of mineral for nuclear fuel. So this comes from John Quakes. The other shoe just dropped after sharply increasing the mineral extraction tax applied to uranium mining in order to limit supply and drive up uranium prices. The government of Kazakhstan has initiated what appears to be a buyback of 10% of issued shares of Kazatomprom. Why are they doing this? Because they understand how scarce uranium is. They want a piece of this extremely valuable mine. Again, this is the largest producer of uranium in the world. So the government is first spiking the taxes on the uranium they're producing to make it scarcer and more expensive. And now they want to own a piece of it. Call it what you want, but they are scrambling along with other companies to acquire as much uranium as possible. We have Wall Street firms like the Sprott Physical Uranium Trust stacking uranium. We have miners hoarding uranium. We have Yellow Cake stacking uranium, right? So there's a scramble for this resource. So over the next few years, headlines like this will be more common. Vistra, Constellation Energy surge on clean energy demand bets to power AI tech, right? There's a massive demand for nuclear energy. There's therefore a massive demand for the resource uranium. Now, to prove this, Sam Altman's OpenAI could be entirely powered by nuclear energy in 2027. Sam Altman's OpenAI is probably the biggest, most important artificial intelligence company on the planet. They control ChatGPT. Microsoft is building a $100 billion supercomputer to power AI. That's how much investment is required. And what they're saying is nuclear energy will power it, right? That's how much demand there will be for nuclear energy. And if you want a pure play bet on the massive demand for nuclear energy, specifically Sam Altman's OpenAI demand for nuclear energy, we have Sam Altman's Oklo. Sam Altman's nuclear energy company, Oklo, plunges 54% in New York Stock Exchange debut, but not before the company received $306 million in gross proceeds upon closing the transaction. So we know the huge demand for energy that AI, specifically Sam Altman's AI, is going to require. And we know most likely where it's going to come from. Oklo, look at the chart, looks absolutely horrendous right now, potentially in the deep value zone. When you understand who's backing it and how important it's going to be and how much demand there will be for what they are providing. So moving around the world every single week, massive updates to the skyrocketing nuclear demand. France defends nuclear power and rejects EU renewable targets. Countries all around the world, including massive entities like the EU, are trying to pump and promote renewables. France is saying no, no more renewables. France refuses to comply with European requirements on renewable energies, preferring to rely on its decarbonized nuclear power. This is a trend, right? Huge countries are moving towards nuclear, like one of the biggest in the world, Indonesia, top 5 countries on the planet in terms of population, nuclear included in 2033 electricity plan, paving way for first reactors. Gulf State UAE considers a second nuclear power plant. Big money in the UAE investing in nuclear. Italy reconsiders nuclear energy 35 years after shutting down the last reactor. South African nuclear power plant wins approval for 20-year life extension. It's happening all over the world. And then we have this from John Quakes. Of the 62 nuclear reactors now under construction, the WNA estimates 28 units will come online by the end of 2026. That's upcoming very quickly. They're going to have to be buying uranium. But more importantly, given that new reactors require loading about 3 years worth of uranium fuel, which is usually ordered at least 3 years prior to startup, the operators of the 19 new reactors to start up in 2027 and 2028 need to order mined uranium now, so it can be converted, enriched, and fabricated. It does not get better than the fundamentals for these uranium miners that control this crucial, valuable resource.